Are you financing a new business venture? Here's how to properly do it. Starting a business begins long before you fill out an application for corporate funding, and taking care of a few things before the official launch can help you quickly secure their financing. Welcome back, folks, to another edition of Sweetie Kiwi. I'm very happy to have you today. I hope you are doing fantastic. I'm doing marvelous. If you're doing as marvelous as I am, go grab a cup of coffee or tea or vodka and let's roll. Today I want to talk to you about how to fund a new business venture, how to properly do it. Number one, you got to take care of a few things first, all right? First, you need to write a detailed business plan. It's very important. What is a business plan? It's essentially a blueprint in which you identify things you want to work on. You talk about your products and services. You talk about the funding team. You talked about your marketing strategy, and a whole host of things. I'm not going to go too much in details here because we have dedicated an entire show on business plan. But suffice it to say that a business plan tells a reader, and that reader can be a lender, it can be an investor, it can be a business partner, how the business will perform in the next 3 to 5 years. The time horizon here is over 3 to 5 years. In the business plan, you not only talk about the strategy, as I said before, but also you talk about the financials, right? So you want to tell the reader the financial projections you have for the business, right? I'm talking about balance sheet, statement of income, and statement of cash flows. Right. You also mentioned things about the competition. Are you in a very competitive market, or are you in a market where things might seem like you are in a monopoly or a duopoly? The bottom line here is you have to give as much info about the business as possible to be able to attract a potential investor. So write a detailed business plan. Now, when it comes to business plan, you don't have to write things from scratch, or you don't have to reinvent the wheel or hire someone to do so. There is a host of business plan templates on the internet, very well designed. You can just choose and just complete and just fill. If you have time, you can also go to the United States Small Business Administration website, the SBA.gov website, and get plenty of resources that helps small business owners get to the next level. Number two, you want to hire key professionals. What do I mean by that? Now, when you start a business, some professionals, some experts are essential to making sure that you don't make crippling mistakes and that you're able to go to the next level. Let's talk about a few of them. Now, first of all, you need an accountant. An accountant is very important. You need someone to actually keep the books, who can do things like financial reporting, bookkeeping, and that's very important. If you're lucky, get an accountant who is also a tax expert. That way you can actually not only talk to the IRS and the state tax authorities, but you can also talk to regulators who wants to peek into your financial records. So it's very important. Hire an accountant who, most importantly, specializes in your type and size of business. You also need to engage the services of an attorney, right? An attorney will help you on many levels. Number one, an attorney can help you file registration papers with the State Department of your state. A lawyer can also help you draft things like contracts for employees, can help you secure the right licenses for your business, can help you also deal with the regulators if you are in a regulated industry. So that's very important. Now, if you have the money and you have the resources, you might want to hire also a business development expert. You want someone who would be part of the sales team, who would be actually drumming up new business for you. It's very important. And again, that's just something that you have to think about. And the last person that you might need is a marketing strategist, and someone who can drive your marketing plan, the marketing plan for the business, both offline and online. Right, we live in a globalized era where you have the preeminence of the internet, so it's very important to have someone who is well versed in both online and offline. Number 3, you want to handle some key administrative details. Now this is very important. You want your website, you want to set up the website. You want to basically also secure an EIN, that's the social security number of a company. So it stands for employer identification number. That's the number through which the IRS can track and making sure that you're paying your fair share of taxes to the federal government. And the same EIN also applies for states tax compliance. So you want to need that. You need to register your business name, right? This is very important. You got to go to the city hall where you live and take care of that. You can, if you have questions, just reach out to your local chamber of commerce. They'll be able to help you. Your lawyer, trying to talk to your lawyer about the legal structure of your business. I'm talking, do you want to be a sole proprietor, a partner? Do you want to create a partnership, a limited liability company that's an LLC, a regular corporation that's a C corp, an S corp, S corporation? You want to be a cooperative or a nonprofit. So here you have a whole array of legal structures that you can use to move forward in your desire to fund a new business venture. Now, the fourth thing you need to do is that once you secure all those three things, you got to start thinking about financing in earnest, right? You want to start reaching out to a few sources. And this is what I'm going to talk about in the next section of this show, kind of tell you where to find funding for your new business. Don't go anywhere. I'll be right back after this. Welcome back, folks, to another edition of Sweetie Q. We are very happy to still have you around. I hope you are doing great. We're still having a conversation about how to finance a new business venture. If you like the clarity and the quality of the content so far, please, drop us a comment, share this content, like it, and most importantly, subscribe and turn on the notification bell so you are aware whenever we drop a new show. Now, where to find funding for your new business? There are several ways you can find, there's several places you can find money for your new business. Now, the first one is you can just decide to fork out your own cash, right? You can fund a venture yourself. If you have some decent cash sitting somewhere unused and you're able to tap into your savings, you have some kind of comfortable savings account, I would say it's not a bad thing just to go and fund the business yourself, right? Actually, it's one of those things that is very, very common in the United States. More than 90%, according to SBA data, 90% of startups are self-funded, right? That's also called bootstrapping. So the thing here is that, of course, if you fund the business yourself, it might take a bit longer to save some money before you start and grow organically. But the advantage here is that you don't have to give up any equity or control of the company, right? The business stays yours. You can also seek a bank loan or credit card line of credit, right? So basically, at least in the United States, if you have a good credit history or existing assets that you're willing to put at risk for collateral, in other words, you are willing to mortgage those assets, you can get a credit card line of credit or a bank loan, right? Now, the good thing here also is that the SBA, the Small Business Administration, can get you infusions of cash without normal backup requirements. So you want to check the SBA website, www.sba.gov, for financing opportunities and financing options. You can also, and this is the number 3, you can pitch to local angel investors, right? I mean, if you live in a metropolitan area, chances are you have groups of local high net worth individuals interested in supporting startups, right? And the thing is, they are also interested in syndicating amounts up to $1 million for qualified startups, right? Syndicated means that they are actually pulling cash from different sources, right? So you want to double check. You might want to get in contact with your local chamber of commerce or go to professional networking events to be able to fund that. Now, if you Google investors in your area, chances are you can find some. In addition to that, there are some platforms out there that allow you to search for local angel investors based on where you live. right? No, I'm not giving names because we don't want to endorse any particular one of them, but a quick Google search can let you know what are the local angel investors in your area. Number 4, trade equity or services for startup help, right? So you can actually barter your skills or something you have for something you need, right? So you can basically, let's say for instance, you have some IT skills. You're very good at computer quote unquote manipulation. You can agree to get free office space in exchange for taking care of the computer systems of all the office tenants, right? And if you're a lawyer, for instance, you might want to take care of the legal aspect of a business in exchange for accounting. So the other business allows you to give them legal advice, and they in turn give you accounting advice. Number 5, solicit venture capital investors, right? Now remember that venture capital investors, VC firms, they invest institutional money in qualified startup, usually with a proven business model ready to scale. Now, so if you have a new business venture, maybe a venture capital firm might not be the best idea, but you never know. Because they look at a whole spectrum of companies, and they usually choose established companies. They usually, right? That's the standard. However, in the last 5 years, we've seen, based on several news reports on CNBC and Bloomberg television, that some VC firms are changing their strategies and are willing to back, new business ventures. So it's all about the opportunity. It's all about the connection. It's all about the product or service. And it's all about the disruptive nature of your new venture. All right, so you want to think about that. All right, I'll be right back right after this. Do not go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We're still pursuing our conversation today around how to finance a new business venture. And I've given you 5 ways to do so before. I'm going to give you 5 more so you can seek funds from friends and relatives, right? The thing is, if you find yourself in a position where you can't get outside funding, you might want to turn to your relative, to your entourage, right? Because the bottom line is that if your own family, your own friends, your own colleagues aren't willing to give you some cash because they don't believe in the idea that you are presenting, don't expect outsiders to jump in, right? So you want to really reach out to them. As a matter of fact, most startups find funding from their entourage. Okay, so that's very important. Number 7, join a startup incubator or accelerator. Now, those organizations are very, very popular. I'm talking, for instance, about the Y Combinator, right? They are often linked to major universities, large companies, or community development organizations, right? So what they do is traditionally, they were good at providing free resources to startups, right? Including office facilities and consulting. Lately, we've seen that they are also starting to finance companies and ventures. So you might want to check it out too. Number 8, negotiate an advance from a strategic partner or customer. One thing you want to do is, when it comes to a new business venture, you always have those early adopter, right? Those companies or individuals who are willing to try the products in beta form. Now, you can actually tap into this opportunity and seek, right, and seek support and negotiate an advance from that customer, right? So if you have a high net worth potential customer who really who embraces your products or service, the idea, that is, reach out to them and ask them, right? Okay. Number 9, start a crowdfunding campaign. Now, companies, platforms such as Kickstarter or Indiegogo can really help you, because what you're doing here is, instead of reaching out to one or two people, to one or two angel investors or venture capital investors, you're reaching out to the crowd. You're reaching out to hundreds of people and thousands of people who, by contributing little money, are able to pull all the resources and make you get the cash you need, right? So this is something you might want to double check, because this is it's a great way for you to raise money, and it's the cheapest way too. Number 10, request a small business grant. If you have the right business and you believe that the government might fund it, go to www.grants, plural, that's grants with S at the end, .gov, and basically there are over 1,000 federal grant programs there. So you want to search for one that really sort of fit your business model. The good thing here is that this doesn't cost you any equity, right? Even though the process is very long, the government takes its time to get back to you. But again, this is if you are in an industry that is deemed quote unquote important, such as social needs, medicine, or education, you might actually get funding from the United States government or your state government. So now let's just kind of recap today's show here. I think this was a great conversation, and I want to really quickly recap. To finance a new business venture and to properly do it, you have to write a detailed business plan. You need to hire key professionals. You need to handle some key administrative details. You need to start thinking about financing in earnest. And where do you find funding for your new business? Now, you can fund the venture yourself. You can seek a bank loan or credit card line of credit. You can pitch to local investors. You can trade equity or services for startup help. Solicit venture capital investors. Seek funds from friends and relatives. Join a startup incubator or accelerator. Negotiate an advance from a strategic partner or consumer. Start a crowdfunding program. Or request a small business grant. All right, folks, this was it for today. I really appreciate having you around. I hope you are doing fantastic. And I will see you next time. But until then, remember, stay marvelous.